Hello from Trend Signal for our review of the data and events of the week beginning the 11th of September. A quieter week on the data front this week, post the ECB and other central banks actually. Draghi from the ECB didn't really tell us a great deal that we didn't already know last week. They're waiting, the ECB are waiting until October before making an announcement on tapering QE. So the markets will continue to discount that, hence the move in the euro. The bank also reiterated its position read rates, saying that rates would remain low for some time to come. So one offsetted the other end to a certain extent. Markets on Monday morning, very much risk-on mode. Far East markets tacked on some notable gains. I think looking at the headlines around, I think investors had been sort of expecting some sort of nuclear test again from North Korea. They celebrated the country's founding day, but I think instead of conducting a nuclear test, they had a regular celebration in Pyongyang. So it looks like there's a little bit of a cooling of the sort of heated rhetoric that's been coming from both sides, from North Korea and from the US. And I think that's the reason for Monday morning's lift. Markets last week, a bit sort of on the mixed side, really. Certainly the FTSE, Dow and S&P are all weak. The DAX, despite the strong euro, actually put in a credible performance, up 160 points. But the Nikkei, in line with the yen, rallying quite sharply, that fell 416 points. So as you'd expect, really. In fact, the dollar fell to its lowest level in nearly 3 years last week, as the effects of cumulative effects, I guess, of the North Korean tensions, the devastating hurricanes. We've had Harvey, and now we've got Irma, and the other one, Jose, which seems to be petering out actually. And Fed policy, which is sort of shifted to a little to the sort of dovish side, really. Sterling, a very strong performer last week, up 2.4 cents to the dollar. On the back of really warnings from the Bank of England that the city and investors seem a little bit complacent about the possibility of rate rises in the UK should inflation necessitate a rate rise, which is quite topical, bearing in mind the Monetary Policy Committee meet this week. On the oil markets, a bit sort of confused, really. They've been buffeted by Harvey. Now you've got Irma, although Hurricane Irma is petering out as we speak. It's now a Category 1 hurricane in Florida, just north of Tampa. The effects are expected to be fairly limited, really, which is from this hurricane, which is really just tracking up that west coast of Florida and won't hopefully interfere with any of the refining capacity in Texas and Louisiana. Let's have a look at the data and events this week. As I said at the beginning, this is a quieter week this week, following on from last week's busy schedule. We start on Tuesday, so nothing out on Monday. Tuesday, we've got our own inflation data here in the UK. Last week, we had a figure of 2.6. We were expecting 2.7, a little bit of a surprise there. That's pulled the rug from underneath sterling's move at the time. But we're expecting a tick up this month of 2.8% on the back of slightly higher oil, gasoline, petrol, diesel prices. So 2.8, that's expected coming out at 9:30 tomorrow, and that will have an effect on sterling, FTSE and gilts. We then have on Wednesday in the afternoon the sort of leading indicator in the US for their own CPI reading, their inflation reading, the producer price index, that's the cost of goods and services going into production. Still no signs really of any inflation there, plus 0.3%. Crude oil inventories, it's been a very topsy-turvy market despite the big drawdowns, and in US inventories the market hasn't responded that positively. We jump to really Thursday. We do have the Swiss National Bank and their monthly policy meeting, but no changes expected there. But the big focus is on our Monetary Policy Committee meeting, the the rate setting committee for the Bank of England. We're expecting no change. It's quite topical to the extent that Carney and Co are attempting to warn the city about possible rate rises. I think it was a headline in the FT concerning that. As always, it's probably not immediately obvious, but there has been a bit of a focus on that by Carney, and I think that's what's giving a few trade is a little bit of cause for concern, and hence the reason why sterling's up to 2 cents 40 last week. Otherwise, we're not expecting any change, though, from the Monetary Policy Committee this time round. Rates will be kept unchanged at plus 0.25%. Thursday, we then have the release in the US of the monthly consumer price index, their inflation reading. It's the core number we look at. The core number excludes the more volatile food and energy components of the reading, expected plus 0.2%. There's nothing in that will cause the Fed to change their mind interest rates and because of inflation or the lack of. And then we've finished the week with a relatively important number, actually, retail sales in the US. Core retail sales expected to come in at plus 0.5%, which is the same level of sales as the previous month. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.